Hey Olga, good to see you again. I think we've both survived 30 June. How are you feeling? It's a crazy time of year.
Yeah, absolutely. Good to see you too, Michael. I know, I can't believe it's already August. I don't
I know.
quite know where July went, but lots happening. We're racing towards the end of the year.
Yeah. Look, it's a time where we tend to get busier as we sort of go to that sort of back end of the year.
Lots of changes too. I think change frightens people. I don't really like change either. I can understand that, but I think that knowledge can be power. So it's good that we're going to chat through some of those changes today.
I'm sure everybody who's sort of listening to this is caught up in the news that the ATO have changed the deductibility of the GIC interest, NSIC, but it's GIC is the one that sort of we mainly deal with and mainly affected, and how that impacts things. And look, I don't know what your thoughts are, but I think from my end, I think it's I don't see it as a massive game changer.
Yeah.
If businesses can't pay their tax, they can't pay their tax. Probably the big thing is, yes, it will increase the cost of having ATO debt because that interest is no longer deductible. And that to me just, I think, means really two things. One is firstly, um, businesses, it's probably more of an impetus to really get in and address their ATO debt, get into a payment plan and get that debt down as quickly as possible to reduce that impact. And secondly, I think, and something that's sort of dear to our hearts and we do in a lot of is around those applications to have the interest and penalties removed. They're far more important now because essentially, depending on your tax bracket, somewhere between a 30 and a 50% additional advantage in getting those interest and penalties removed.
Absolutely. And I think it goes with the story of what we've been saying, what the ATO is saying, and you can't quite get rid of the lawyer in me. I still love the law. And if you look at why this came into place, it's to stop people thinking of the ATO as a small business bank, as a cheap bank, as an easy bank. We don't have to pay the ATO. We can just leave the debt sit there and we'll worry about it later. Which we know from the active enforcement action that the ATO have been taking all year, it's the same solutions. It's payment plans and it's getting rid of the GIC. And this is another stick, so to speak, or another way to show that the ATO isn't just there to lend businesses money. You can't think of them just like a bank as usual interest. That you need the right solutions. You need to get on board and be proactive with the payment plan. And then exactly as you said, when we go in with the right information, using the legal practice statement to get rid of the interest, it's actually the same result as it was 6 months ago. So nothing in that place has actually practicably changed for businesses other than more, I think, motivation that you just can't ignore this debt any longer.
Yeah, look, and I think that's right. And it's funny too, because people, as you say, used to see ATO in one sense as a cheap source of
Mm.
funding, and it's not cheap, and it's certainly become a little bit more expensive. But the other thing I'm often saying to people is not only is it not cheap, it's a dangerous source of funding because of the ATO's powers and how hard they're going and how quickly they're going. If you engage quickly and you engage properly, that all goes away. But if you don't know how to do that and you don't have the right advice, then it is a really sort of dangerous way to sort of, I guess, fund your business, particularly if you're funding growth. The other thing I think that's sort of been coming out that's sort of related to this, there's been a lot in the press about, well, you should go and fund it. You should go and take out a loan because, if you take out a loan, it will be tax deductible. Well, I think that's still to be tested, but let's assume that's right and it is tax deductible. Um, I again don't think that's sort of necessarily the best fix for everyone. And I think you've really got to assess it on a case by case basis because, for some businesses that might be the thing, but you need to really look at, what rates you're going to pay on this funding because the main players aren't going to fund you. What are the terms going to be? The other thing that often worries me too with this is that sort of funding, they'll say, well, we'll require either personal assets or a personal guarantee. Then you're shifting a business debt over onto your home or over onto your personal assets. And probably the other thing too, which is what we've already talked about, is that you can go to the ATO and say, look, we've paid this debt off or we're paying this debt off. These things have happened to us. Would you consider removing the interest and penalties, and not just the interest accrued to date, but the interest during the payment term through the term of the payment plan? You can't go to a private lender and say, okay, well, we've paid the debt off. Now can we have all the interest back?
Yeah,
They just don't
absolutely.
work that way. So it may or may not be a cheaper way to do it, or it may or may not be a better way to do it, given the movement of personal and business liabilities.
And it's also the security and then the effect that may have on cash flow and lending ability if you need to lend for other things. So if you need to borrow. So if you need to borrow for a digger or you need to borrow for equipment within your business, if you've borrowed to pay out this debt, instead of just putting it on a payment plan with the ATO, a long-term affordable payment plan, it could then hamper your borrowing ability that you actually need within the business for other things to continue to run your business as well.
Yeah, yeah, 100%, 100%. So I think it's horses for courses, and but
Mm.
I think the key around all of this is before you jump into something, and there's been an urgency created around this. Just get some advice, take a breath, get some right advice from the right people, and then make a decision based on that.
Yeah, absolutely. I think it's what we're always talking about is there's the right tool or the right solution for each problem, and it's getting the right advice around that without panicking and without jumping in, and the security piece. So again, we talk about the right advice, whether it's insolvency, whether it's borrowing. To see the people that are looking at the whole picture that know what's going to help and what's not going to help for your particular business. I think there's a lot of chatter too around when the ATO will remit the interest piece and when they won't. And we're still seeing lots of successful results in getting the interest back before the loan is fully paid out. So we both see a lot of clients in which the interest can be over half the debt.
Mm,
So once we've got the interest remitted and the client's in a compliant position, that ATO debt drops by half. So if they were looking at borrowing, they would actually be borrowing double the amount to pay out that debt than they might otherwise need.
yeah, really good point. Really good point. And it kind of leads us nicely into probably the other thing that is quite topical at the moment is the small business restructuring. And we're
Yeah.
reading a lot about that. And I saw some stats the other day that the numbers have sort of gone through the roof and are expected to continue. We've always sort of said, look, there is a place for small business restructuring. About 3 to 5% of the clients that we see, we can't help. Need to go down that route because literally they can't pay it back to the ATO in a time frame that's applicable. I think what it has become to a point has been a panacea for all that. And I think that's a real risk, and there's sort of risks that come with that. But I think alongside of that, and I've spoken about it before, but alongside of that is the fact that the ATO's attitude towards the small business restructuring has changed significantly over the last 6 months or so. And, you and I were just talking to a liquidator prior to coming sort of on to do this. And I was speaking with some last week, and they are seeing a real change in the attitude of the ATO to refusing to agree to if you look at the stats, they were voting 90 percent they were voting yes. Now it's dropped down significantly, and there's a lot of factors going to that around directors loan, related parties loans, compliance, a whole bunch of stuff around that. But what we're seeing is probably the fallout from it. I know you've done some. I've had about 6 or 7 clients that have come to me in the last 2 months that have had them refused. And they've sort of faced with, well, what do we do now? Do we go down an administration route, or we go down a liquidation route, which they don't want to do? And so they've been referred to us. And I had one only last week, and they'd had it refused, and it was based on exactly on those issues that I talked about. They had about a $700,000 ATO debt.
Mm, mm.
ATO they thought would vote in favour of it. They didn't, predominantly on compliance, and so it's been refused. Where to from here? They went and saw another liquidator, and the liquidator who did the first one was good quality. It wasn't
Mm,
a
mm.
they were knew what they were doing, but it's just the ATO has changed. And then they sent them to us, and we were able to sort of look at that, get them into a long-term payment plan, and we will go back and clean up their interest sort of during the course of that once we've re-established some compliance. But what I have to say is it's harder to do that once you've gone down that route,
Yeah,
because
yeah.
you're saying to the ATO over here, we're insolvent and we can't pay our debts. And then over here, we're saying, can we please support us and have a payment plan? So I think it's another factor that businesses really need to think about, in addition to all the other knock-on effects that happen with small business restructuring around, impacts on borrowing capacity, impacts on banking covenants, insurance covenants, all of the things that go with that. But another factor is it going to get up, and at what price is it going to get up, and what happens if it doesn't?
And I'm also seeing some that have got up, and then clients are coming to us and they didn't understand or realize the personal liability component. So it's not always just if you've received a director penalty notice, but there is a personal liability component that kicks in even if you've lodged late in the past, and so they're personally liable. They've gone through the process of an SBR. I had one where the debt was 350,000. They thought it would all go away. The personal liability component was 300,000. So even though the SBR was successful, it hasn't got rid of the personal liability component. They don't have 300,000 that they can magically pay off the personal component. And so now they need our help to get that component into a payment plan. And so in circumstances like that, SBRs are not the magic pill in every single situation that can fix things. And I'm seeing a number of these come back through to us now to help the directors when they thought everything had been fixed with the company.
Yeah, look, and I think it's really, really good advice in the sense that, to anybody who's listening to this, if you have a client or you happen to be somebody who's about to go through and you're looking at a small business restructuring, the most important question they need to ask of the small business restructuring practitioner is what personal liability will survive the small business restructuring? Because you're right, there is a perception out there that it gets rid of it all. And the reality is, if there is a thing called a lockdown director penalty notice, i.e., you haven't lodged within the appropriate timeframes, that survives. And even if it hasn't been issued prior to doing the small business restructuring, and we're seeing a lot of these where they've done it, moved on, 6 months later, they get a nasty letter from the ATO with personal liability of, say, $300,000. And nobody told them about that. And then I guess you need to ask that question, and then you don't have to worry about whether somebody's going to tell you about it. You need to ask what survives this and what doesn't.
And the other major issue we're seeing is there was I suppose I call it pub talk. There was a lot of chatter around, well, it's not a real event of insolvency. SBRs don't really count. They're not considered an event of insolvency. But what we're actually seeing is it is an act of insolvency, and people have come out of SBRs and they're looking to borrow, and they're now being, I've had a number of brokers that I've worked with saying there's a whole heap of lenders that will not lend to those businesses or those directors because it is an act of insolvency. So it's reduced their lending capacity for business funding and for assets and for the normal course of running their business. And they didn't realise that there was going to be such a flow-on consequence to this. These are good businesses, they're viable businesses, and there are other options, like when we talk about payment plans, for the business to have the breathing space to pay off the debt without having the consequences that they weren't aware would apply to them.
Yeah, it's interesting, isn't it? Because there's been a few, I've had, probably three or four in the last few months where they've come to me and said, because the ATO, as you know, can report to the credit reporting agencies and people know we can get that removed. And so they come to us and it's usually a broker saying, I'm just about to do this land. The fund has done a search. The ATO has reported them. And I go, well, that's fine. We can fix that. We'll come in, we'll sort it out. We'll get rid of it. And then you look at it and you go, it's not a reporting by the credit, by the ATO. It's reporting by ASIC, and you can't remove that, and that stays there and it stays in the history for years. So again, these are the sorts of questions where if you've got no choice and you've got to go down that route, that's fine. But it's around having, as you said quite earlier on, having that knowledge and asking those questions to know, if I go down this route, this happens, and this happens, and then you can balance it up appropriately.
There is no magic pill. There's a number of different pieces in every puzzle, in every outcome, in every solution. And it's about asking the questions, finding the right people. Like some days you and I would have six potential clients that we talk to each every single day. So much of the work we do is talking to individuals about what the potential solution is, what's right for them, what's right for their business, what's the background, what's going to fix it. So I think the biggest thing for people to realize is there is no one size fits all. There is no magic pill. It's how can my business or how can my personal situation get through this debt, get through this troubling time that's going to be the best outcome for me, not necessarily what the media says, or not necessarily, other than us, of course, on YouTube, not necessarily what social media
We're
says,
great.
but how can we get through it? And that's the hardest bit, I think, for people, especially if you're stressed, trying to find that way through to the other side.
Yeah, and I don't know about you, but I probably, as I said, there's that 3 to 5% we can't help. But I'm more than happy to say, I can't help you and go over here and do this, as long as it's the right outcome. And
Yeah.
and people don't always get that advice because, it's a competitive world and people have got school fees to pay and all sorts of stuff. But there's no point, taking on a client if it's not the best outcome because, that hurts them in the long run, hurts you in the long run. Um, Probably the other thing I wanted to talk to you about was more of a general comment around payment arrangements and remission applications. Obviously, our bread and butter, it's what we eat, sort of sleep and breathe, sadly, or rightly, whichever the case may
And
be.
nothing else. We have 14 people now that do nothing but payment plans and
Yeah,
GRC applications.
yeah. And look, it's brilliant. But one of the things we're constantly hearing, and I spoke to a group of accountants last week. We had sort of 50 accountants in a room, and they were all talking about how hard it is to get payment plans through, how
Mm.
hard it is to get remission applications through. The press coming out of the ATO is that they've kind of just returned to COVID levels, and so it's not as hard. And I think where the disconnect is this, I think they're both saying the right thing, except I think where the disconnect is this, it is harder. There's no question it's harder to
Yeah.
get payment plans, and it's no question it's much harder to get remission applications through the ATO. But I think, and part of it is a change in the attitude with the ATO. They have swung the pendulum away from COVID. But I think the other component, which is getting a little bit missed in here, is that the ATO have legal practice statements. You're well aware of them. I'm well aware of them. We've read them 1,000 times. We know what they do. Um, what we are seeing is, as part of that, is the ATO are saying no longer can you just put something in the portal and we'll accept it. We need strict compliance with those legal practice statements because when I hear this, and there was something in the press recently about we can't get any remission applications through, and there was a lawyer in one of the larger firms in Sydney said, well, we're getting them through all the time
Mm.
as long as we comply with the legal practice statements. And I'm sitting there reading that going, here, because it's the same with us. We've always done it in compliance with those. So much, in many ways, it's business as usual for us in getting these through. But if you don't do it, then, people have heard me say this, computer says no.
Yep.
You
Yep.
haven't done it either in a payment plan in a form the commissioner can approve, or you haven't met all the criteria to have the interest and penalties removed to make it still fair and reasonable that you get your interest removed where the business that paid their tax doesn't.
And
So
we talk about specialists all the time. Who is the right person? Who is the specialist? And when you're talking about the legal practice statements, I feel for accountants, I think a lot of clients think that an accountant needs to be a specialist in 1,000 different areas. We don't do BAS, we don't do lodgements, we don't do compliance, we don't do tax advice. I could keep going through all the things we don't do because the only piece of the puzzle that we do is payment plans and the remission of interest. So if we have 14 people that do nothing but that all day, every day, their knowledge and their specialty in understanding the practice statements, in understanding what needs to be done, can't be the same as someone that has a whole heap of other expertise and a whole other raft of things that they're expected to do within their day. So I think it's difficult especially for people to go to their general accountant and say, well, I've got this very small issue that you probably don't deal with all day, every day. Can you just go fix it for me? And that's exactly why we come in. And I think probably in the last 6 months, we've got more referrals from accountants than I've ever got, needing and understanding how we work together. And we do. We come in, we're a bit like the surgeon that fixes your knee. They wheel the specialist in, we fix it. They go back on to looking after the clients, all of their general needs, and the client's fix. But it's hard to expect one person to be an expert at so many things, I think, in today's day and age.
yeah, look, and you're right, Joe. I mean, in the sense that I think the list of things we don't do is far longer than the list of
Yeah.
things we do, and I think that's really important around that. I mean, I've been doing a bit of work with a mid-tier accounting firm lately, and they came to us with a cafe chain. They've got about half a dozen cafes around the country, and they were in payment plans, good solid businesses, but they'd been affected by a whole bunch of things that were absolutely out of their control, and they had around about $800,000 in debt across four entities. And when I spoke to the partner of the accounting firm, they said, look, we've got them in payment plans, but they're really struggling to meet them. They were in 12-month payment plans. And by the way, we can't get any of the interest and penalties removed. And I sort of said, well, look, send them to us. I'm almost certain we can improve on that. And we did. We got every one of those into a longer term plan, 30, they range between 30 and 36 months, which is good. Now, we can't do that for every business, but these guys had good compliance. And so we're able to get those long-term payment plans. and we had all the interest and penalties removed, and I think they added up to about $185,000. So, they were over the moon with what we achieved. But most importantly, and it's what you said earlier, we're working with the accountant on that, and they were able to bring a specialist in. We made the accounting firm look good, and then so the client's overjoyed with what we did, but they're also very happy with the accountant actually introducing this specialist into the mix, and now they've got payment plans they can do on their ear,
Yeah.
and they owe 180 odd thousand dollars less.
I think there's two good points in there. Sometimes I say anyone can get a payment plan, but sometimes they're crappy.
Hmm.
So it's not just about getting a payment plan. It's a sustainable, affordable, the best payment plan for that particular client. And that even if you did get a crappy one, we can come in and fix it. And so that's not the end. Just because they've got a 12-month one and might have been told that's it, you can't do any better than that, because of our expertise and because of our specialty, we are fixing these payment plans to give people more breathing space and get them on longer arrangements all the time. It's a huge part of what we do. So don't feel that there's no hope. I always say, and people that know me say I don't like taking no for an answer. And so when we're presented with a payment plan that we think we can do better, we will absolutely push it to get better for the client.
Yeah, and I think the sort of final thing on that was that the accountant she's very, very experienced, very, very good accountant, and had that confidence to go, you know what, this isn't my area of expertise. This is, we talked about the legal practice statements. The clue as to what sort of work it is in the heading legal practice statements. And she had the confidence to be able to say, look, this is the best that we can do, but we know somebody who we think might be able to do better with the ATO, doesn't reflect on them in any way, and was able to sort of pass that on. We do our piece, then we send it back. Much happier client.
Yeah, absolutely. Which is what we want. And again, it's a different solution for every client. So every client needs something quite different. It's very bespoke. And that's why we always go through at the beginning. What's your circumstances? What's your situation? What's your cash flow? We had that one that I helped a little while ago, a landscape gardener from Tasmania. And his cash flow was really lumpy depending on the wet season and the dry season. And so what we had to do was, it's not a cookie cutter payment plan. We didn't just divide it by 30 months and hope for the best. We looked at when he was going to have higher income and when he was going to have lower income, depending on the seasons and his work. And we were able to tailor a payment plan perfect for that particular client, which is going to be very different to, say, a cafe, for example.
Anyway, Olga, thanks for today. That's been great. Really enjoyed our chat. And for anybody listening, if there's anything you specifically want us to cover in our next instalment, then please leave us a comment in the chat, and we'll endeavour to sort of cover it off for you.
Absolutely. Thanks, Michael.